are going live. Happy days. Happy days. Cool stuff. There we go. We are live on uh, on Zoom. I mean on YouTube. There's a few people that are also waiting on YouTube. There has been, let's see here in the chat. Okay, understood. Perfect. So there has been, it looks like our conversation is still echoing in Zoom. So there has been quite a few people that have signed up for today, or should I say for the next 4 days. I don't know who will make it, and I don't know who will not make it. But the one thing that we are going to do is that we are going to be on time, especially for those of you that have already been waiting in the waiting room for the last 10 minutes and some time. Cool stuff. So I would love to hear from you, whether you are on Zoom or whether you are on YouTube. Just drop in the comments below. In Zoom, drop in the chats. So if I say comments, I'm sure you're going to follow me, okay? So just drop in the comments in the chat below. Where are you from? Where are you connecting from this evening? So while you do that, I am in Johannesburg, specifically in the West Rand. That is where I am connecting from. So I'd love to hear from where you guys connecting from. Cool stuff. Mpumelelo says, lovely to see you, Jen. Mpumelelo, lovely to see you too. Maybe you should join the Zoom room so I can see you, my friend. The last time I saw you was in November. Awesome stuff. Kerry is here from Midrand, Gauteng. Luyolo he says, how's it? He's from Cape Town, Parklands. Awesome stuff. Mpumi is from Pretoria. I'll speak on his behalf already. Nare is in Kempton Park. So it looks so far that Gauteng is dominating here, hey? But that's cool. Luyolo, we will give you space because, I was in Cape Town at a stage in my life. I stayed there. I shall give you the space that you need. Cool stuff. So we're just going to do maybe another minute or so of where everybody from so that we can connect and really just get to seeing each other. Cool. I see you there. Awesome stuff. This is the nice part. I wanted both Zoom and YouTube, so I could see a few people. I like the fact that I see people. I like the fact that I connect. Cool stuff. So as everyone comes in, I would just love you to drop down in the comments whether you're on Zoom or in the chat whether you're on Zoom or YouTube as to where you are from. So I want to welcome you this evening. I look forward for the next 4 evenings. For me, when I do start teaching, I would like to consider the fact that I use the most simplest of words, just to express what I mean, what I say. And as we continue in this particular training, I promise that I will, wherever you've got comments or wherever you've got some sort of request to be a little bit more clear, that I will certainly do so. So let's get into the thick of things. Like I shared with you, hi, I am Genevieve, and I want to find out from you guys this evening, what are you looking forward to around the property training? I want to hear from you. What are you looking forward to learning or absorbing or whatever the case is through this particular training? I would love to hear from you guys. Hear what is your expectations and those beautiful things. Cool. While you do that, I shall have me a young sip of tea. I would love to hear what is it that you've been looking forward to actually learning within the property space. Don't be shy. How to spot good deals. Nari says how to spot good deals. Lu Yolo says how to facilitate a sourcing deal legally and successfully. Great stuff there. What I will do for those that are interested in wholesaling slash sourcing, I promise that whenever we go through the content, if there is content that I need you to zoom in on, not only from just an investing point of view, but from a wholesaling point of view, I'm going to say to wholesalers, sources, or no, I can't call your sorcerers, right? Because that just would be wrong. I will definitely say this is the path where I need you guys to zone in on, and then we can unpack it as we're going along. For those of you that do not know what property wholesaling is, I promise that at least between day 2 and day 3, that you will get to knowing what it is, because those that are following me on YouTube, I've had a number of calls with you, just understanding property wholesaling and where you are. So I'm sure a lot of you would be able to catch up there. Kerry says, I would love to learn more about running the business and property mentorship and networking. So, Kerry, to answer your question in terms of running the business, I touch on it very lightly in terms of understanding the property markets. We're going to do that repetitively throughout the training. And we're going to zoom in on Wednesday. I believe that the business part as well as the property markets part will pop for you. So keep that particular part in mind. Mentorship. If I could ask you guys if there's anyone that's interested in any like mentorship or any sort of coaching, if you don't mind, we can park it to the end. I will talk about it here and there if you have got questions. It's just I really love that you guys come through and understand a lot more about property. In terms of networking, because we are where we are, the networking is slightly different. So I'm going to touch on understanding and creating a different footprint. Pumalelo, I see that I've bullied you into Zoom. I see you. Cool stuff. So I trust that that has answered your questions, Kerry. Yeah, because for me, the most important thing is that you guys get a grip of what property is about and what you can understand from them. Cool stuff. So I'm trusting that that is at least a fair introduction. What I will do is let me just give you a quick overview on let's see, I've got everybody still in. It's just there's a few people coming in as we're going along, and there are some on YouTube. So I am straddling the lane here, but I'm hoping that I'm going to do a good job of it. Cool stuff. So in terms of property investing for beginners, I really want to make this disclaimer. We literally going to start off at the very basics. Some of you are much further along the way. Others are kind of started and others have not started. So I'd love to know that over the next 4 days, I give everybody a very fair chance. So if you are one of those people that have started and you understand the lingo and things like this, I would love that you be patient with us so that we can all usher through this particular training together, more particularly those that have not started. This is why it's called property investing for beginners. And in the beginning, we're really just going to be touching on some definitions, the words that we throw around. So at any given point, ladies and gents, I would love that if you've got questions, please do not hesitate to drop them in the chat if you're in Zoom, or down in the comments if you are on YouTube. So we're all good. If we're all good, give me a thumbs up, either react or type for me in the chat, all good, because then I know that I'm not just talking to myself and that I'm together with everybody else. Cool stuff. Wonderful. I love to see the reactions. Quite a few reactions. Happiness. I see you all found the reaction buttons. Yoo-hoo! And Pumi says, all good. Hey, Pumi, now I can see. Nice to see you, even though that's your picture, but still nice to see you, brother. All good. So, ladies and gents, I want to tell you a quick story before we get into what the evening is going to present. Last year, when the president had spoken about, actually, it was just a couple of days before this. The irony of life is this: I've had an office in Fairland here in Johannesburg for the last 4 years, some change, right? And I remember at the end of February, my lease was due for renewal, and I had gone through to the office less and less and less and less because I found there's quite a few people that wanted to meet me either at a coffee shop because they're coming from work, they don't want to be in another office and things like that. And the most ironic thing happened is that on the 1st of March, I decided that seeing that I'm going to my office like 3 times a month, if I'm working a lot more from home and a lot more from coffee shops and all sorts of stuff like that, I'm going to give my office notice. And I gave notice. And when I gave them notice, I said, okay, cool. The end of March is my last day here. So I've literally packed up my stuff, and I knew that maybe I will run a training, maybe not, because COVID, there was a lot of things going on. And I saw it quite interesting that when the president said hard lockdown, it was a good time, or my timing in giving my notice was quite there. But I also realized there was quite a few things that I'd already had in my mind that I wanted to do really special for people that are following in property investing. And I remember sitting down about the 15th, 18th, and thinking, instead of doing a paid class, what if I do a free 4-day online? So, like, break up the one full day and put it over 4 days. While I was thinking about this, I created this Facebook group that I used to have. It was temporary. And then the president announced about the hard lockdown. And so many of us went into a flat spin. And then I remember the 28th of March, 2020, just as we're meeting today, there was like more than 100 people that came on Facebook into my group, and we started what we're about to start. So I don't take this lightly. So I want to say that in as much as I'm celebrating a 1 year anniversary in wanting to teach the subject for free, teaching from the abundance of what I do, I also want to say that I cherish your time, because I could just be speaking to my computer, but you've taken time to connect in with me. So you're celebrating 1 year. Yes, it's not the best situation, COVID, but we're celebrating 1 year in it. But we're also celebrating 1 year of many people that were thinking about property investing, had a better picture, had a better grip on actually starting or not starting. So what I will also do as well, over the next few days, there's some of my students that are doing a couple of things that I think will be good for those that are starting to hear. I'm not going to bring people on here that are going to talk to you about buying yachts, popping champagne bottles, because life is just kumbaya in property investing. I really would love that, especially as a beginner, you hear how others have gone through this journey, are currently still on this journey, and fighting and pushing and prodding. So, with saying all of that, I just really wanted to say welcome. And this evening, I know, is going to be awesome. So far, I would love to hear, does anyone have any sort of questions? Are we cool? Are we on point as to where we are? All good. Super grateful for your time. Awesome. I'm super grateful for the fact that you're here, Loyilo. Awesome stuff. Your name is reminding me that, wasn't there something where you only live once? I'm slow, so please, guys, don't shoot me. You may just say, oh, Jen, obviously. There is something that you only live once. So your name is reminding me about that, Lohilo. Perfect stuff. Cool. Be on point. Perfect stuff. 100%. So there's a lot of you guys are in agreement. So as I shared, this was something that I thought about, and I did it. And last year things were popping. And I really would love that many of you learn from here. You may not necessarily choose the way I do things, but this will just be a way to open your eyes to different things. The one saying I still hold true in my life is that no one has ever become poor by giving. And, just think about a candle. There's a whole lot of candles in the room. One candle has got a light. That one candle can light many different candles, but it is not anything less after doing so. And that's the way I see about giving. and giving from the abundance of what I do on a day-to-day basis, giving from the abundance of the training and coaching I developed over a period of time after being stalked. Um, yeah, I'll tell you about stalking, how I was stalked to almost bullied into doing a lot of training and coaching, but I'm grateful that I'd caved in over time. So this is, if you don't mind, if I could ask you guys, I want to get permission from you. Is it okay if I share who I am for those of you that may not know me, and who my family are, and why I do property? I will not take more than 5 minutes. I need permission. Cool stuff. Oh, thank you so much, Kerry. I really try to. Tandy says, yes, Jen. I just want to make sure that I am not abusing the space that I'm in. Sydney says yes. Loyilo says yes. Dr. Masola says yes. Awesome stuff. Then thank you so much, guys. I'd love to introduce to you my family. This is the Jack family, but there's a reason why I chose these pictures. The picture on the left, or rather my left, where my husband and I are in the middle, two guys on the side of us, that was the last day of our third day in property investing training. This was December 2016. We finished off our training. The gentleman that's standing next to my husband, his name is Sean Thompson. I asked so many questions to Sean, and I said to him, please, at one stage, please don't kick me out of your room. But for me, one of the things I like to do is to understand, because when I understand, I can get going. And the gentleman that's on my side, he was helping Sean, facilitating, and there was quite a few others. But this particular picture reminds me of that particular December morning, or should I say evening. It was actually like past 7 or something crazy like that. It reminds me of that day of I'd given 3 days into investing in myself. My husband and I could least afford it. We paid 14,000 Rand to be in that particular training. And we were in that training Friday, Saturday, Sunday from 9 until 7 every day. My daughter was just about to turn 2. And being as a mom, being away from your child that long, or your children, my big boy, he was a big boy, and we could understand each other and we could talk to each other. And we were here, we were here. That's my soldier. But at the end of the day, this picture signifies the beginning, even though this was the end of training, but it was the beginning of taking what we learned and putting it into action. Now, the training that I'd gone through was legacy training, and legacy education is a rich dad education. And this is why we've got who we call affectionately in our home our granddad. The picture with Robert Kiyosaki was one of the days that it was a very emotional day. In fact, there was 40 entrepreneurs in the room, and if you just breathe wrong, Robert's asking you, guys, are you here with me? So it was definitely a pleasure within the space of 1 year to be under Robert Kiyosaki's training directly in the same room as him over 4 different times. And the groups that we were in would range anything from 30 to 70 people. And that was intimate. So we got quite a bit from the guy himself. So we affectionately look up to him and call him our granddad. In the top right hand corner is a picture of my family. This was our very, very first family picture after my daughter was born. The long story short, my daughter, she was born 2.56 kgs. We left hospital 4 days. Everything was all good. Uh, a day later, we came back because she was throwing up. She had to have major surgery. And 37 days later, every day going back to the hospital, she finally came home. But my son asked us the one question, Mom, when are we going to take a picture with my sister? She's so beautiful. And I just thought, to have eyes like a child, to see past what looks like a threat. And this picture was a picture taken because Tawana said, I want to take a picture with my sister. She's so beautiful. In the bottom left hand corner, where we're all pointing and pulling tongues and whatnot, our success story in this is that was our first holiday paid by property investing. We did sourcing, we did joint ventures, everything around creative finance. When money was coming in slowly, we made way to pay our debt back. And there was also where we said we want to celebrate being in property. And we had spent 1 week in the Kruger National Park in Marlotte Park with a whole lot of fun the four of us had, and it was absolutely amazing. And last but certainly not least, the picture in the bottom corner was the first time TJ was called to a property investing event to speak about, tell us about your journey, tell us about what you've done in property, tell us where you are, and encourage people. So I'm his cheerleader. And in fact, we're blessed that we support each other through our madness. And I call it madness because it's not everybody that stays together after losing 5 million. So this is the Jack family. And the reason I put these pictures together is to remind me of my why. And my why was not initially, oh, my family is beautiful. It was about the debt that we needed to get out of. And it evolved over time. Because as you grow up in property, you start realizing different goals. And when we had the debt under control and a system to pay that, we needed to look at our next process and we needed to look at our next process. So this is the Jack family. So I want to say thank you so much for allowing me 5 minutes to share with you about my family. Awesome stuff. Dr. Masola says TJ is amazing. Indeed, I have to agree with you. I am blessed and really fortunate to have married somebody that is a go-getter, even though the two of us can absolutely work on each other's nerves. But the one thing that we do together very well is look at our future and look at to where we're going. So Dr. Masola, I absolutely agree with you. So moving on, our journey into property is because we were serial entrepreneurs. As serial entrepreneurs, what we found is we had gone into a number of different businesses, and eventually the chicken business is the business that took us down. And in the chicken business, to give you a glimpse of it, is that we had 4 chicken coops, actually six, two very small ones, one producing 1,000, one producing 2,000. But these other 4 were producing 5,000 chickens at a time. And imagine you in a space where you've got your chickens are sitting properly around 30 days. And for those of you that know broiler farming, up to 56 days old is a fully grown chicken without having been fed all sorts of injections and things like that. So in this, our chickens were between 30 and 40 days old, and one got sick, and then 50 got sick, and then by the evening 1,000 had died. But the next day we had to put down chickens, and then we had to get rid of the bodies or get rid of the chickens in the right way, and that's a process on its own. And then we had to fumigate the farm, and one chicken we did a post-mortem on, 750 rand. I'll never forget that ever in my whole life, because every time I ate Nando's after that, I thought I paid 750 rand for a post-mortem for a chicken. And so chickens took on a whole new meaning to me. So with that, we had gotten into the 5 million debt. But it was during that growing debt, my husband said, let's go to a seminar. I thought he lost the plot because he was talking about property. I thought he couldn't be normal. He's not normal. And over time, I mean, we're together 11 years. I should think and remember that we both are not normal. But we pushed and prodded, and we got into the creative finance. We started with the joint venture. We did some sourcing deals. We did some back-to-back deals. He started a business. I continued in creative finance, and we were able to continue in our own strengths in our household. And that is how we got into property investing. The one thing I want to say is that I believe the difference between myself and my husband, with my husband and I as a team in property versus a lot of people, the difference is taking action. So if there's a nugget that I'd like to leave you with in this particular story of our journey into property and our journey in property, the thin line is action. I've written a small ebook about it. I've put my whole heart and soul and all of my emotions and feelings into this particular book. If there's any of you that have not downloaded it, just let me know on email, because you all got the email to be here with the registration links, and I'm very happy to reply because it's all on PDF and you'll be able to see the book and get a read through it. I published that book in September 2019. So nonetheless, that is me in a nutshell and how we got here. So tonight, what I want to do is I want to start off, like I shared with you, with definitions. Okay. I have got four definitions I would like to unpack. While I start with that unpacking, I would love to hear from you. There's a word in property investing or in property that you feel like, can someone just unpack this word? That is a word that I would love you to drop in the chat if you're on Zoom, or in the comments below if you are on YouTube. But the first one I want to unpack tonight, I mean, you may just say, but Genevieve, it's so obvious, isn't it? But you know what, guys? To me, it wasn't all that obvious, right? And to a lot of people as well, this one is not so obvious. Property investor. So I want to hear from you. What do you think a property investor is? What do you think a property investor is? While you are dropping that for me, Tanda Nani, what I'd love for you to do is the email that you got reminding you about today's training, just email me saying, Jen, please send me the book, and I promise to reply. Because the other process would be you submitting your, actually, I'll send you guys the link. I want to hear from you. What do you think is a property investor, or who do you think is a property investor? I want to hear that. Guys, don't be shy. Someone who perceives property as a means to generate income or heal the profit. Yeah, sure, no problem. Who would that someone be, Loyilo? Who would that someone be? Is someone who buys property for profit? Sure, no problem. So who would that somebody be? Who? Give me an example of who would that somebody be. So you're telling me a good definition of what a property investor is, but who could be it? Luyila says anyone. Yes, anyone can be a property investor as long as you've got access to money at the bank. You may have access to money that you put into the bank. You may have access to money by means of an inheritance. So basically put, a property investor is not somebody that is ultra super special. They just have access to what some people may not have. Let me tell you a funny story while I hear from others in the group. What is a property investor? You know, I don't know if any of you have been in some of the sort of marketing spaces I've been in, right? I remember getting into the seminar because TJ took me. And while this guy was up front sharing about his journey and everything, and he spoke about these investors, the picture that came to my mind was Men in Black, like Will Smith and what's his name? Tommy Lee, white crisp shirts, black jackets, like proper. And then when we were in the training room, I imagined, and some of you may just say, Jen, you've got a vivid imagination. I imagined the Men in Black again when they were talking about speaking to investors and connecting to investors. And I almost was under this illusion that these investors that they were talking about was going to come to the front of the class, and they were going to say, I am looking for properties in what, and literally give us requirements as to where they're looking for property. So in my mind, I don't know if some of you are like me, but some of you have gotten awesome definitions here for me, right? But that was what was in my mind. So I always, it bothered me that that's the picture that sat with me for about 6 months. In as much as when we were in the training room, they would say, you now address yourself as a professional property investor. I had to disconnect. My brain wasn't like functioning because the meaning in my mind of a property investor, I looked at somebody that has got lots and lots of money. That was my mind. And so I never could get to the point that anyone could be a property investor. So if there's anyone that is like Genevieve here, just I want to say, I'm hoping that that definition just helped you somewhat because it gave me a lot of uphill when I initially got into property investing. Now, the second thing I would love to hear from you, when you hear deal, the word deal that is mentioned in property, what comes to your mind when you hear the word deal? Tell me what comes to your mind. What is a deal? What is a deal? Let me just see if there's anyone that commented on YouTube. Oh, yes, there is. A couple of months ago, I would have said it is someone with a lot of money making more money from property. I believe a property investor is anyone who makes money from property. High five. I absolutely agree with you. And I mean, just think about it. I would love to hear in your mind. I would love to hear from you a little bit more with that one. What shifted because you were just like me saying, at least some time ago, you just knew it was somebody that was making a lot of money from property. That was my thinking. Hey, I used to think to myself, men in back crisp white shirts, black jackets, and whenever they would say property investor, the worst thing, I don't know, okay, not the worst thing. Let me not also just be too dramatic. One of the craziest things that came to my mind was that it had to be a guy. I mean, like, how limiting is that thinking, right? So, like I shared with you guys, in the next couple of days, I want to be as clear and flat and honest with you as possible as to the things I had going on in my mind. And I'll tell you one of the things I learned that it's better for me to do that because there are people I know that are out there that are maybe thinking the same thing as I did, that may feel like maybe this is why I'm not going to get into property, right? Mpumi says a lot of paperwork. Exactly. All right, awesome stuff. Pumi, you're so funny. Pumi's answer to a deal is a lot of paperwork. He's gone through that paperwork. So I see you, Pumi. Yes, a deal is profit. But a deal when we are talking in terms of property investing means a property that could yield you a potential profit. All right. So whenever somebody's talking about a deal this and a deal that, all they're just talking about is I found a property and this property give you money. That's what it is. It's a property. It's a property investing opportunity. Yes, there's a lot of paperwork that goes behind it, Mpumi. But it literally is a property investing opportunity, a property. Whether the property is a building, whether it's residential, whether it's a piece of land, whatever structure it is, as long as it is real estate. When you hear in property, people talking about a deal, they're talking about property. All right, awesome stuff. Now, the third thing that also, sorry guys, I was a slow kid in class, but I'm okay with that because when I started popping, I was popping. Now, the third thing that really just bugged me for a while, I just kept on hearing this word, due diligence. And I just was like, due diligence, what? Like, so tell me, what is due diligence? While you're saying what is due diligence, I'll check comments both sides. Dr. Sorry, I said it so nicely earlier. What's going on with me? Dr. Masola said, in terms of yielding money, is there a good yield in terms of percentage? Yes, I will definitely explain the different yields and why some people, or in property investing, many people have anchored 15%. Many people have anchored 15%, But over my time in the last 5 years in property, I have found that after a while, property investors are after a couple of things. And then it's not only about the yield in terms of percentage that matters, but we're definitely going to explode that one on Wednesday when we run the numbers. On Wednesday, we're going to run the numbers using the deal calculator. And we're going to talk to each of the line items because it's the running of numbers that literally brings all the training together. So today, tomorrow, and Tuesday, we're setting up the foundation, right? We're setting up the foundation, or should I say, we're going down, digging trenches, setting the foundation, and building the walls. On Wednesday, we'll put the roof on, which is the deal calculator. Make sure you time to check all the areas in the deal. Absolutely, due diligence is that, Carrie. And Tombi says, do your homework. Absolutely agreed. It's your homework. But specifically, I want to share this one point with you, right? I heard these words interchangeably: due diligence and market research. I heard this interchangeably, and I needed to understand, is it really same shoes, different socks? And what I learned is when somebody says, have you done your due diligence? They're talking about that actual property that you're interested in, that deal, that number 1 Smith Street, if that's the address of your property, right? When they're talking about due diligence, that's what I learned that they're saying. And then when I hear, did you do your market research? It is that part where we identifying what's happening in the neighborhood. And like Lu Yolo says, identifying and understanding the potential risks on a particular deal. So you're understanding what's going on around the area. So you just think of due diligence, the actual address that you're interested in, and then you think of market research, what's happening in and around that address in that particular area. And that's how over time I got to learning the differences between the two. And I was like, now I see you, you know. So it made a lot more sense for me at that particular point. So guys, you are absolutely on the right track. Make sure you check. Make sure you have time to check all the areas in the deal. Absolutely. Let's see if there's anything in YouTube that I may miss. No, I haven't missed anything in YouTube either. Cool stuff. Now, the fourth one. The fourth one is it's a double-edged sword for me. There's some people that have come through to me and said to me, Jen, if there's really something called a no money down deal, why do I have to pay for training, coaching, property reports, and things like that? Because it's supposed to be a no money down deal. Now, I want to share with you to separate. No money down deal is a strategy within property investing, right? How you're going to learn how to do that is not part of the deal. It's not part of the strategy. And I find this pops up a lot. So it was not something in my mind that I struggled with, like I struggled with the first three. This last one, I couldn't understand, why did somebody put the learning and the tools that you need to use as part of the strategy? Because whether you do a no money down strategy or not, you're still going to need the tools. You're still going to need the education to go with it, right? I mean, anyone after this training in the next 4 days can go and find a deal and close it. Anyone can. I believe that, right? But there's very few people that will take that risk. This is why some people look to mentorship and coaching, like Kerry was asking about earlier. But like I shared with you guys, throughout this training, I'm going to try less to refer to that, because yes, where there's power in coaching and mentorship, there's also power in what I'm going to be sharing with you guys if you take action. There's a lot of power in what I'm going to share with you over the next 4 days. So these are the definitions tonight that I really wanted to touch base on, because again, I find it coming up time and time again. And if it comes up time and time again, I'm then wanting to know that at least tonight, if there's anything that I did well in terms of covering that information. And that is definitions. The next thing is mindset. Why would I talk about mindset? So many people use mindset as a crutch for for a lot of stuff that they do. But what I do believe is being an accredited life coach, that's where my superpower is, right? I'm an accredited life coach. It is something that I wanted to do. And I remember in February to 2016, as I graduated within the space of being a life coach, I started understanding me better. I mean, this is selfish, right? But I'm going to share quite blankly. I started understanding me better, and I'll tell you why. In mindset, I find that our attitude counts for more than anything under the sun. Whether you agree with me or don't agree with me, I would love to hear from you in the chat or in the comments below. And here's why I say our attitude really just defines where we're going. One of the things I believe is that there's always a solution. For whatever we are in, there's always a solution, right? In property, things may go wrong. In property, things may just look like, okay? But your attitude will change the direction of that thing. You can either continue dwelling on the problem, oh, I'm stuck because I don't have, and I don't have, and I don't have, right? Or you can actually say to yourself, look, I've tried one, two, three, four, five. Who can I talk to that can help me get the solution? Where can I seek this particular solution? And that's why I say in property and in life, mindset is the first thing that you need to build. You know, it was so funny. I got an inbox. I got an inbox from somebody that made me chuckle. And you know what? I don't discredit it, but I do chuckle. He says to me, his name is quite a boy's name, so I just assume Brian. I've never met a Brian girl. So Brian says to me, if your training is worth so much, why would you give it away for free? And in my world, I said, because I believe that there's abundance all around us. And if I am abundant in a particular subject, or if I'm abundant in terms of money or wealth or whatever the case is, surely it is my prerogative to give of my abundance. And he said to me, I'll be quietly waiting and watching throughout the next 4 days to see if I've wasted my time or not. And I again chuckled. I believe, and this is my opinion, that Brian may have been shortchanged at some stage. Look, let's put it this way. There's entrepreneurs, there's businesses out there, people make money this way and I cannot run away from the fact that I also charge for training. But I also decided, because of my attitude being where it is, that I can give of my abundance and not ever feel that somebody will never come back to me because they've gone through training with me. That is, for me, an attitude that is always just going to be focused on a problem. But instead, I say to myself, when I have a can do attitude, the glass is always half full. And you know what is the beautiful thing is that over the next 4 days, I get to connecting with amazing people like yourself that has decided to pitch up. I mean, when I looked at the list, I was stressing, like, how am I going to be dealing with like almost 300 people? But then I chuckled and I'm reminded, by the way, not everyone that commits to something comes right through. So I want to share with you that in terms of mindset, I use these examples because of the practicality of where we are, that mindset, especially attitude in mindset, counts more than anything. It's really important because your attitude often comes from the environment that you're in or the beliefs that you have. So if you believe that there's always going to be somebody out there to swindle you of something, they're going to swindle you of something. In property investing, it's exactly the same. If you're going to constantly focus on the fact that somebody's going to steal a deal from you, if you're a wholesaler slash sourcing agent, they are going to steal the deal from you. If you are focused on the fact that the glass is always half empty, that is what your environment and your beliefs dictate. My belief dictates that I can sow into your life and not be anything less, like I'd started off with that initial quote. You remember the quote that I shared? No one has ever become poor by giving, because my attitude is on that. That is my environment. That is my belief. I then believe that we are in a strong environment. And so I want to say to you, some of you may just say, okay. But those things matter, because what happens is when your attitude is not in the right place, your belief system is going to just look in a different direction. What you believe actually is possible. Whatever you believe is possible, and what you think you you personally can do, you can. So if you think you can't jump, you can't jump. If you think you can jump, you can jump. So if you think you can make it in property, you will, because your belief is in the space where you're saying, you know what, I don't care what my circumstances are, but I do believe that I can get to popping. I can get to a point of really just being on point. So you may think it's impossible to find motivated sellers in your area. If that's your belief, you're going to struggle with that. You might also think it's impossible to find people that who will literally finance your deal, be a silent partner, be a joint venture partner, be a source, be a property investor to you. If you believe you can't, you won't. And that's what I believe is the bottom line of things. You may have to hit a couple of walls to get to that person ultimately, but nothing that is worthwhile comes easy. You may even just think, could it be possible to replace my income? If that is what you're after. You may even think, well, at the end of the day, is this really whatever you believe is what's going to be fed back to you? Because guess what? Whatever you believe is going to be absolutely right. And then the last component that I would like to share that closes off attitude and behavior is courage. You need to have courage to face whatever rejection that comes along the way. You need to have courage to say, Rome wasn't built in one day, and I'm going to give it all that I've got. You need to have courage to come out of your comfort zone so that you can achieve whatever it is that you want. All right? Because I believe that whatever is worth it in your life, you will make happen. I have walked into walls, guys, walls where some days I was like, oh no, God, I don't believe this is possible. I've had moments. I can be a crybaby when I want to be. But the one thing I learned is that as long as I'm out of my comfort zone, and if I hit into that wall, I ask myself, what could I do differently? I hit into that wall, I ask myself, what could I do differently? I'm bound to get somewhere. And by taking action, which is the third point in the mindset here, you need to have that courage to take action, because when you take action, results come. And the results, whether you're looking for the results or not, you're always going to be able to refine the results that you get. So, in getting started in property, understand some of the things that you may not. Don't be scared to ask the definitions that you're struggling with. Like, they keep on saying this one word. I call it, Japanese sometimes, because I don't know a word of Japanese. So if somebody starts saying stuff to me in Japanese, I'm going to just think, okay, and same to you too. And that's exactly what new disciplines bring. It brings acronyms, it brings statements and things like that. But I believe as long as your attitude is in the right place, your belief and your behavior is in a space where it is feeding your attitude, take action in the things that you know. Because I promise you, there's many people out there that will say, I know that. That's nothing new. I know that. That's nothing new. But when you ask them, so what have you done about it? Very, very different conversation they have. Very different conversation that they have. So follow people or those that you are interested in that can actually show you proof of what they do, because there's a lot of people that will try to mess with your mind in this space, okay, in terms of your belief system. But as long as you can see what they do and you can take nuggets from them and run with it. And mind you, we're going to have homework every evening. So each time I want you to come back and share your homework with me so that you can say, no, Jen, I tried this. What else? No, Jen, I tried this. Oh, I thought of this. No, Jen, I did this, but how come that? Can you promise me that? I would love to hear you in the comments below, in the chat in Zoom. Okay. If you find that you are falling out of Zoom quite often, I made the alternative for YouTube just so that you can go straight away to YouTube. So don't forget that. So in closing off, in terms of mindsets, I really want to share with you is that I believe that mindset is the most important thing with anything you want to do in your life. You've got to have the right mindset. And if you don't have the right mindset about things, you are just going to be one of those people that are going to be a ship without a sail, just kind of floating out there. Kerry says, that sounds great, Jen. I'm happy that we can be interactive. Awesome stuff. I want those questions. I want those experiences. How's that for me sounding demanding? Eh? I want. I would love to hear from you just so that at least we know over the next 4 days, we start ticking the boxes off in the things that you kind of knew, the things you knew as a confirmation, and the things you may not have known. So, ladies and gents, anything that I start off being a life coach, I will always start off in terms of mindset. So, I trust that the mindset component is something that will help you as we go along the way. What we're going to get into now is what I call the overall strategy of any property investment. All right? Any deal. What is the overall strategy of any deal? Okay, can we get used to some of these words so that we know? All right. The first one, I always find this first one tricky. This is the first thing that comes up for a lot of people. And look, I am with you. I always start thinking, oh, how am I going to raise funds? Until I met something called creative finance. We're going to talk about it later in the training, which is sourcing, which is sourcing slash wholesaling, joint ventures, angel investors, and other avenues outside of just a traditional bank on where you can raise finance for this, right? Now, there's something that I usually do when I'm in the classroom. Okay. In the classroom, I will, at this point, I would be breaking off pieces of paper. Okay. And I'd give everybody a piece of paper. And then everyone has a pen. And I would ask them if the 10 of us, or the 4 of us, or the 7 of us. So today we're going to say, for now in Zoom, if the 19 of us have to create a company, whether it's a stokvel, some sort of consortium of some sorts, but if the 19 of us had to go into a deal today, how much money would we be able to raise around the table? Now, I'm not going to do this online because it becomes a tricky one to do online. But I want you to think about this, right? I may just do that anonymous poll. I'll see if I can do it without losing anybody. And the objective of doing this is this. Sometimes you'll say, oh, I've got 2 or 3 friends and we really want to do this business together, but we don't know how to raise funds. Sometimes we don't look at the most obvious avenue, which is amongst the friends. So in the class, what I usually do is I'll give everybody a piece of paper and I'll say, I don't want your name. I don't want nothing. I don't want to even know that it's come from you. I just want you, if with the 19 of us were to create a business tomorrow, how much money would you be able to come up with in 30 days? And it's always fun and exciting in the classroom. And everybody just writes a number, just a simple number on the paper, a simple number. When they write the simple number, they drop it into the cup. When everyone's done, they come to the front, and then what I then end up doing is reading out the numbers, and somebody tallies up the number. There was one crazy day I did that. There were 7 of us in the classroom. It was the most fascinating thing to see, because after I read out and we calculated amongst the 7 of us, if we were a consortium or a conglomerate or a stokvel, amongst the 7 of us, we would have raised 350,000 Rand. And that was in the next 30 days. So I want to challenge you. Sometimes when you start looking at raising funds, don't always just think of the obvious. What are the obvious things that we think of when we raise funds? Would anybody like to share that in the comments or in the chat? What is the obvious thing that we think of when we're raising funds? Let's see if the bank, correct. That's one way. I want to see if I can go onto YouTube in a different way, because I don't want to be messing with volume and things like that. Stokvel, private investors. How do you find private investors, Maureen? Perfect. There we go. Network events, absolutely correct. So you see how you guys are coming back with that information, right? These are the first obvious ways we start thinking. But I've learned over a period of time, tough, perfectly fine, Ntombi, absolutely. This is another way, because that's another way that I was going to share with everybody. Sinin Flantler says loans, absolutely, agreed. So these are the different ways we start thinking about raising funds. Some people say, if I don't get any of these ways of raising funds, then I'm not going to start. And this is a one starting point where I say, you know what, sometimes your answer is sitting next to you. Sometimes if you're saying, we want to start 1, 2, 3, the fact that you say we is sitting next to you, and that is a way that you can raise funds. So you guys have answered the different ways of raising funds. So what I'll do is I'll see if I can find an anonymous poll, because I don't want to know anyone's standpoint in terms of finances for the next 30 days. That's not the aim. But the aim of the exercise is to say that a lot of the times when we look at raising funds, sometimes we don't look at the obvious. The second thing, in terms of the overall strategy of any property investment, is strategy. So now that we've raised money, we want to then know what is our strategy. And if we can actually get to understanding our strategy, I can tell you this, half of your battle is already won. And I'll tell you why. So many people get into property, they have strategy as a moving target, and they get frustrated. So here's an example. Oh, I'm so interested in becoming a property wholesaler. I get onto wholesaling. I follow all the different wholesaling videos that there can be. And in the moment somebody mentions back-to-back deals, it's like, wait, I want to do a back-to-back deal also. Somebody else mentions installment sale. No, but I want to do an installment sale also. So what happens is, when we get involved in property, if we really do not understand what our strategy is, we are not going to get far. And I say this from experience. I say this with all the love in my heart, because at the end of the day, when you understand what you need, you will then understand that it takes focus in that thing that you need to get anywhere. So oftentimes it's not so much about where am I going to look for the deal that's going to make me the most money. It's about, am I going to raise capital, or do I want an income? If I'm looking at just an income, I'm looking at passive income. But if I'm wanting to create a pot of money and a number of different pots of money, I may just be looking to do flips. Get a flip, buy a property that is run down, fix it up and sell it, and then you get one amount. And then there's some people that say, look, I want a passive income. But in this passive income, I want to make sure that I get income on a monthly basis, and I want capital appreciation from that particular property. So when they are looking at capital appreciation, they now know, okay, my strategy is to look in an area that potentially is a budding area. It's showing promise, and there's a lot of promise of what's going to come. So my question to you is, or rather, let me first make a statement and then I'll ask a question. When you are interested in fine tuning your strategy, I want you to ask yourself, where am I? Because if you can actually understand where you are, that will help you define your strategy. Here's an example. TJ and I started. Guess what? Where were we? We were in ever growing debt. What did we need to do? We needed to focus on creative finance. So, which then meant daydreaming about doing a flip, or daydreaming about my property giving me a huge amount of income to replace my salary. It was not that it was not part of the dream, it was not part of the immediate dream. So my way of getting into things, and TJ's way of getting into things, we needed to say, if we're going to source deals and sell them, what is our criteria? Our criteria was that if we can get them going, no problem. But if we get a deal that has got a good cash flow, shame. We want to find a joint venture partner. Why? Because we see the potential of, instead of just getting paid 10,000 for this deal, how's about getting paid 1,000 for the next 3 years? It's a very different thing, but the mindset of a joint venture is long term. So which means when I start dancing with a property investor that's going to fund my deal, it's a long-term strategy. It's as good as a marriage. So going back to what we're saying, now we know how to raise funds, but now we also know how to establish what is our strategy. What is it that we're after for where we are? Not for where we want to eventually be, for where we are first. Because I'll tell you, legacy and leaving all wonderful things for my children did not get me going in the mornings, some mornings when I was feeling like a crybaby. When I was feeling, oh, the world is against me, I'm dead, I'm tired, God, just take me home now. Like, look, guys, I had moments. I don't know if any of you have any sort of emotional breakdowns like that. At one stage, I had an emotional breakdown. I had never lost so much money in my life ever before. It was like, I was crying some days, like proper snot and tears. But I needed, that didn't get me out of bed. The idea of legacy for my children didn't get me out of bed. The idea of, can I just get these creditors to stop phoning me? That was my immediate thing. I'm done. Have you ever had creditors call you? Guys, that Hammond and Paul and Brook and Light people are relentless. They'll call you up to 4 times a day. And for me, my honesty here tonight, like I shared, was, can I just get these people to stop phoning me? Can they just stop it? And that was where I was. And that's when I said to myself, okay, cool, focus. What is your strategy? The strategy is creative finance. What are the strategies in creative finance? Sourcing, joint ventures, back-to-back deals. Okay, do you know how you're going to assess what deal looks like what? And that's where the numbers come into play that we're going to do on Wednesday. Now, the next step in the overall strategy of any property investment is area research. Why would we want to look at area research? Now that I've got the money, now that I've understood what my strategy is about, I need to find an area that complements my strategy. So I cannot go looking in the middle of a residential area for student accommodation and the closest tertiary institution is 10 kilometers from my house. That strategy and that area, they're not in the same WhatsApp group. Instead, if I am focused on service accommodation, which is student accommodation, I now need to say, okay, which tertiary institution is going to tick my boxes? And then I go into Google Maps. I type in that particular tertiary institution name, actually, because we're here to do things practically, right? Here is a practical example of what I would want to do if I am looking for student accommodation. Okay, cool. Let me share my screen nicely. Let's go into Google. If I am now saying, I want a passive income and I want capital appreciation, meaning my property, the value of my property should grow at a steady rate. Because in some areas like Johannesburg CBD, for about 10 years, some of those flats are still worth 200,000. But the cash flow that comes from some of those properties are a very different story. So some people just say, I want cash flow, cash flow. So here I would say, okay, cool. If I'm interested in student accommodation and I want to know which area my student accommodation is going to work in the chat or in the comments below, give me a tertiary institution name. Okay, let me do. Where is it? It disappeared. Okay, UJ. Maureen and Tandy says UJ. Okay, Wits, UJ. Okay, let's go back to. Let's go back here. That was also my opportunity to drink a little bit of tea. So we saying UJ, University of Johannesburg. Okay. If I am interested in UJ, let me move this one. If I am interested in UJ, here's UJ here, right? We see this particular area. Okay. Let me highlight. There we go. Nicely. Can we all see it nicely? If I'm interested in UJ, there is a lot that's going on, right? But I'm not going to come into Honeydew to go and look for student accommodation for UJ. I'm going to come here into Google Maps, okay? And I'm going to say, okay, cool. I want to see what are the areas in and around UJ. There's UJ, the athletics space. There is arts and culture. There is, because this is the actual university here, right? There's quite a few things that is going on here. But right now, I'm going to say, actually, I now need to start looking in areas like West Dean, Perth Road, Kings Avenue. I need to see what is in walking distance to this particular tertiary institution, because that's what's going to determine my strategy of student accommodation, because I want a passive income specifically in student accommodation. Okay? Because then if I'm looking here and I'm thinking to myself, well, there's a hospital close by, there's quite a few other different things that are close by. What is it that ticks my boxes about UJ? And now I start looking in and around these areas. Why? Because I now know Auckland Park, all of these different places here, Perth Road, like I said, Kings Avenue, all of these are talking towards UJ. But if I say, you know what, because I stay in Honeydew, no, somebody also mentioned KZN, UKZN, Westville. Somebody also mentioned KZN. Let's go into KZN because I think that one's going to also just tick the box of my thinking. Here we come. We start seeing everything about UKZN. But if I look in this area here in Westville, what else is in Westville that I could decide um, is a good place to rent? I may just want to look at if if student accommodation doesn't work, what else could potentially work? Then I start looking at, there's a guest house, there's a primary school. What else is actually happening in and around Westville? There's Berea West that seems like it's close by. Okay. In Durban, everything is close by. I'm a Durbanite. So like when I came up to Joburg, I used to think, yo, Joburg is a far country. But at the end of the day, my point of the matter is when you're sitting and you are looking at what is my strategy, what is the thing that's going to bring me money, you actually just have to say, okay, now let me understand the area. And if I'm looking at student accommodation, can I now first look at the tertiary institution that's going to determine the area that I am going to do um, student accommodation in. So now for the wholesalers and the sourcing agents in the world, I'm going to use those words interchangeably. A property wholesaler and a sourcing agent, it's just two different terminologies meaning the same thing. You find properties for property investors that don't have the time and you sell the proposal to them. Okay. So now for the wholesalers, this is what I want you to keep in your mind. Raising funds, you already know you're sourcing, right? So you already know that's not part of what you do, but that is part of your conversation with your property investor. I usually keep the money part of the conversation towards the end. So my conversation with the property investor would sound something like this. I mention it, and I'm hoping that you can catch why I mention it now. I say, hi, I'm Genevieve, and I'm a sourcing agent. Okay. And then they'll say, hi, I am Cindy, and I'm a property investor. And I'm like, okay, cool. So how do you find deals? Would be my question, because I want to present my service to you, right? And they say, for example, they say, oh no, sometimes I struggle, whatever the case is, or I use sourcing agents. Then you say, well, being a sourcing agent, which area do you look in? Then they will tell me the area. Okay. And when they tell me the area, I then ask them, how far from the area do you stay? The reason I want to ask that question, sometimes when you manage property very far away from you, property investing can become a frustration. And sometimes investors don't think about it, but then on the other hand, some investors don't mind. Now, when I understand what area you're interested in and how far you stay away from it, I then ask, so what strategy were you thinking of doing in that area? So you see, the investor is going to be the one that raises funds. We need to understand their strategy, and we want to understand what area do they invest in. So your basic conversation in an introduction is you wanting to understand their strategy, how, which area, how far from that area do they stay in, all right? And then you want to know, well, make me understand, how will you fund the investing opportunity? That's a core of the conversation, because it's part of the overall property investment strategy that we're talking about now, right? But for the fact is, you want to understand this, whether you're going to be the investor in future or whether you are finding this conversation with the property investor. Because when you start saying, understanding their strategy, their area, how far from that area do they stay, and how they're going to be raising funds, you know what? You, as a wholesaler, if you know that area, you can say to them, but in terms of strategy, I haven't found that. Is there a specific area in that neighborhood? Or you go back home and you start understanding more about that particular property or that particular area, so that you can see if that particular strategy will work in that area. So I trust that that slight branch off for the wholesalers slash sourcing agents is something that is worthwhile for you. Cool stuff. Now, going back quickly to the presentation, that is raising funds, your strategy you now understand, as well as the area research. So we want to find out in terms of area research, what really is important, okay? I showed you a practical one if you are interested in student accommodation. Another one that you want to start asking, ask yourself in terms of what's important in that area. What is the demand for properties? What are the types of tenants that are actually in that property? In terms of local property management, who is the management company that has been used the most? And in terms of your typical rental for these types of property, what does that typical rental look like? Why would you want to know what the typical rental looks like? Because in that area, if property is selling for 400,000 and your rental income is 2.5, 3,000, already you dead in the water because your rental is not going to cover your bond, right? So this is why I say those are the things that are important to know. It's also like going to an extremely luxury area. Think about going to Sandton. I mean, for what you would pay, the same size bachelor unit, for example, of what you'll pay in Sandton versus what you will pay in another area, it's worlds apart. Now you have to think about it. Okay, in Sandton, if I've got this particular unit for 900,000, can I really get about 11 to 12,000 rand rent from that one bachelor? Because the rental income should be covering my bond if I'm going to get a bond and my monthly operating expenses and still giving me a cash flow. And like I shared on Wednesday, we're going to dig deep into that by going through the deal calculator itself. So this is why I say in the overall property investment strategy, if we know that where we're going to get the funds from, if we understand our strategy, if we're here for income or if we're here for one bundle amount, which is capital, we then know we're going to go into an area. And when we go into the area, these are the types of questions we ask ourselves that really just pop into what gives in that particular area, right? So now moving along, in terms of the overall strategy of this is the analysis of the deal, which is what I was saying to you, we'll unpack in quite a bit of detail on Wednesday. But here is a short analysis, which I've just mentioned. When you're looking at your monthly rental income, right? Your monthly rental that's coming in must be able to cover your finance costs, which is your bond, etc. And then from the money that's left over, you need to be at least be able to think about, is there a management fee and what other monthly operating expenses are there? So I want to hear from you. What monthly operating expenses are there in a property? Oh, rates, rates and taxes, levy, awesome stuff. So it's exactly that. So we want to know the rent that comes in. If we get a 5,000 rand rent and we've got a 3,000 rand bond, the rent must pay the bond of 3,000. Of the 2,000 rand that's left, do we have money for electricity, water, insurance, rates and taxes and levy? And when that is done, do we have money left over? And that's one of the biggest things in property investing that we want to know. This is why we invest. And this is what the good doctor was asking about earlier in terms of percentage healed. How much money, what percentage is an ideal percentage? And that's what we're going to do by means of the calculator on Wednesday. Cool. I'm going to just, at this point, this is the quick maths, as I've shared and repeatedly said. In terms of the overall strategy of any property investment, it's strategy alignment. So what do I mean? So we find a deal. When we're buying a distressed property, we refurbish, renovate, repair. Those are just synonyms. We fix it up, okay? And it can increase, it increases the value of that property. But if we have to really just take a step back, on the market, if that property was a property that is fit for anyone to move into and is able to live in, right? This particular property, say it's 500,000. But when it's run down, you're then looking at 200, 250, 300,000. When we fix it up, we bring it back up to its worth of 500,000. So the first one is called the buy, refurbish, repair, renovate, and sell. That is a flip. You want to understand my strategy, whatever my strategy is, I'm aligning the deal that I have found to my strategy. I buy, I renovate, and I sell. Is that part of my strategy? Maybe not. Maybe that would be my exit strategy, because whenever you get into property, you want your first strategy to be your number one love that you want from property. If that strategy doesn't work, you need to have an exit strategy. So if you are in the space where you buy and you want to renovate and rent, you wait for capital appreciation and then you eventually finance that deal. That's your number one love. That's what you want. But if it doesn't work, you also want to know, if you sell it straight away, can you get out of that deal? And can it still at least break even or give you money? That's what we're talking about in terms of strategy alignment. Or are you in a situation where you, like me, we got into property investing, we looked, a lot of property investors want to rent, but there's also a huge number that want to do flips. So we needed to understand, okay, if we are able to get this property and there's rental, if they need to exit, can we flip it? And the objective of finding any ugly property is to make it attractive for people to come to it, to either rent it or buy it from you, depending on your strategy. Then there's something called a power team. A power team, others will call it your mastermind team, but the bottom line, your professional team, these are synonyms. But the bottom line of the matter is, in terms of your power team, it would be an attorney. If you now need the services of an attorney, do you know of any attorneys that specialize in law within the area? That is the type of question. Trusting the process. I'm going to see if maybe Tuesday or Wednesday, I'm not sure yet. Depends on the availability. If I can bring an attorney that is in property through to our session, and if I do get that opportunity, I would love to hear from you the type of questions that you will ask that particular attorney, so that when I do call him or her and I say, could I use 15 minutes of your time to come and share with the people that are interested in starting in property investing, I will then be able to say to them, this is the type of questions that you'd be answering. So don't forget, in the chat, drop those thoughts around an attorney. Just started with attorney dash what type of question you would ask an attorney. An attorney is an example of somebody in your power team. Another example of somebody in your power team would be a builder, somebody that's going to be giving you quotes on these rundown properties. Another person in your power team, just think about what is the processes in and around property. Is a bond originator, somebody that can help you get the best interest rates and that you're looking for in and around property. Those are the type of people that will fall under what people will call your power team. And last but certainly not least is that Now that you understand what goes into the overall strategy of any property investment, all you now need to do is execute. Execute the deal, go and find it, do what you need to do in and around that deal to see whether it's going to give you money or not. And the one thing before I leave with lessons is to say, when you are in property, we don't pay asking price. We always make an offer. I'd like you to bank this particular thought so that it becomes in action on Wednesday, because then you'll see what I mean by that. And ending this particular part off that really just talks around property, the overall property investment strategy, is lessons that have stood the test of time for Genevieve and for, for how I see it in people that I've either worked very closely with or have had the honor of mentoring and coaching. Consistency, advice, and patience. Why would I say consistency? Formulate your strategy and then stick to it consistently. If you are in creator finance, don't suddenly think, oh, by the way, because I could afford this, maybe I shouldn't do creator finance. Think about where you are. What is your initial need? If you can afford it, do it on your own so that you can get that pleasure of having a deal behind you. And then later on, if you want to do a joint venture, at least you'd be able to say to your future joint venture partner, this is what I've done, right? But think about your strategy. Jen and TJ had to sit down and face the reality. At one given point, I could go to a car dealership and swipe my credit card to get a car. That is how high up the food chain I was able to get and really build up my credit score. So of course I was devastated and cried like a baby when everything just felt like it was lost and it had fallen apart. But when I was able to find a way within creative finance, it's not that my credit score no longer bothered me. It did not take such important precedence. So when I would work out my payment strategies back to the creditors, and they would say, Mrs. Jack, you do are aware that it will take you X amount of years. I'm like, dude, I'm setting up this payment. The payment's going to happen. How many years, whatever it takes me to get wherever, don't worry so much about that. This is what can be done now. I was able to have that confidence because I then understood where my importance lied. I was formulated my strategy. I kept my creditors quiet. When your phone only now rings for business and it doesn't ring for creditors, you must already know you've tipped its scale because your mindset is in a space. My mindset, let me own my ish. My mindset got into a space where they quiet, sure, they gave me a chance to breathe. Now that they gave me a chance to breathe, how creative can I get in this space because I know I can win? If I've got these guys quiet, now I know I could win. If I could close that account, now I know I could win. If I could walk away from this, what was seemingly important, it is important, but no longer first on my list. I now know I can win. So I was able to declutter my mind. In terms of advice, any advice you get from the man in the pub, or should I say, any advice you get from the man in the pub is free because it's worthless. Have you ever sat and you're having conversation and then someone says, my uncle was in property and you know what happened with him? He lost so much money, and this is why I'm saying to you that property is junk. It's not a good place to invest in. That is secondhand information. You don't know what your uncle did to get himself into that pawpaw. You don't understand all the moves he made or he didn't make to get into that pawpaw. Have you also heard of, that happened to my sister's best friend and all of that? I find that it becomes worthless information because if it didn't directly happen with the person that I am talking to, right? Then I'm kind of questioning what is the validity in this advice they're giving me. Not that I have to shun everything away, all right? It's like going to counseling. Sometimes in counseling, you actually just say to yourself, yo, this counselor has never had life happen to them. They're giving me a nice storybook theory to fix my life, right? And then sometimes you'll go to counseling and then you're sitting in counseling and you think, yo, ish has happened to this person, but it may not have happened the same sort of stuff that's happening to me now, but I can hear the conviction in which way they're guiding me. And that's the difference by what I'm talking about. All right? Patience. Don't jump into any deal before because you've got itchy feet. There's a lot of people that feel like, yeah, we can conquer the world. Ladies and gents, on Wednesday, I'm going to make you this promise. On Wednesday, we're going to go through the numbers. And then I'm going to do something again that I don't just do. I'm also going to give you the deal calculator. And then when you find a deal, I want you to come back to the video for the running numbers and you learn how to do it. That's how vested I am in wanting to see you win. And that's what I'm going to give from my abundance. At one stage, I didn't give the deal calculator because I worried, I stressed. Are people really going to understand it? It takes time to understand numbers. That's when you can schedule a call with me. But that doesn't matter. But at the end of the day, I'll show you how to use that deal calculator and I'll give it to you because I want you to be careful of itchy feet that's excited. You know, when you get a deal, you're excited as heck. You're popping bottles and everything. You're excited beyond your skull. Like, I can't believe I've just done this. And then, boom, it's a quick rush down when you realize, flip, I overlooked some things, or I didn't do this, or I got into this deal because I had itchy feet. Okay. In fact, here's one. Tomorrow evening, one of the ladies that had gone through this training that you're going through now in these days, she's going to come and share with you. She's just closed a deal. She bought it. They did whatever they needed to do. Her and her sister put it onto the market and it's finally closed. I was sweating bullets because the one thing I highlighted was the one thing that manifested. But when she dropped me a message the other day, I was like, oh, thank you, Lord. I have never felt that relief as if it was my deal, except my net. But nonetheless, I'm just illustrating on how far you can take this. So here's a quick life cycle of a deal that what we've been talking about, right? So you buy this distressed property. What is your strategy? You need to understand what is your strategy when you're buying this distressed property because you get in there, you renovate, you repair, you refurb the property. What are you going to do now? Your strategy, is it a flip? So are you going to sell the property at this point? Or is your strategy rental? Are you going to rent the property at this point? When it doesn't work, there's no bite in the market to either buy the property if you're flipping or rent the property if you're renting. What is your exit strategy? Remember when I was talking about your exit strategy just now? What is your alternate strategy? So that you can step into it for a short period of time before you go back into, hey, by the way, it's been some time, the market looks fairly okay. I'm now going to jump into fulfilling my initial strategy. So look at it as this way. I'm going to buy the distressed property. I'm going to repair it. I'm going to rent it. I'm going to flip it. If I don't flip it, there's no bite. I'm going to rent it for 6 months. After 6 months, I'm going to sell the property. Deal fulfilled. What does it look like in your particular space? Okay. So now that we've got that one right, I have got a few attorney questions. You're even making me think, Kerry, now which attorney I should be calling. So Mpumi asks, now let's start with Nari. Nari asks, how long does it take to close a property? Nari, because you and I have had a strategic call, I would assume that you're talking from a property wholesaling point of view. Every deal has its own life cycle. So it can take anything from 1 month to 4 months from a property wholesaling perspective to do that. Why would I give this time frame? I have had where the deal was good and I've taken 6, 7 investors there, and I'm thinking, are you the guys that told me you got money available? Are you really the same superstars that would flash money in front of me? And now you're struggling with this deal, right? So sometimes, from a wholesaling point of view, you may struggle to close the deal for that investor. This is where the conversation I spoke about earlier, where you say, what is your strategy? Understand your area. How far from the area do you stay? How you're gonna raise the funds to get this particular deal, so that you know how you are going to be negotiating, right? That's why I say that's important to get, because when some of the investors that come with me to this one particular deal, one person says, "Yo, this place is distressed, guys. Yo, no, Jenna. I didn't realize it was this distressed. I don't deal in distressed properties of this nature." And in my mind, I was like, what you talking about? Okay, no problem. I mean, we're all entitled. So then I was able to ask at that time, because after viewing the property, we went to a coffee shop and we sat down. I said, then tell me about your worst case scenario of a deal and your best case scenario. So now I took my friendship, relationship, connectionship with this property investor to a new level. And then I understood this guy potentially prefers a deal where there's a motivated seller. The circumstances, maybe the person is leaving town, getting divorced, something like that. Maybe that person likes that type of deal because they're motivated to sell. You'll still get under market value, but you won't get this level of distress. So I was able to then bracket that person in my mind. And then the flip side, I said, but you like equity. There's 900,000 of equity in this deal. Make me understand. So at the end of the day, it was actually quite an experience. Now, on the other hand, Nari, I have found an instance, actually, my fastest deal started and ended within 2 weeks. I found it. Real estate agent called me, Jen, before I put this on the market, I need to have a conversation with you. Come and see. So after a while, I become very close with real estate agents, especially those that bring me deals that tick my boxes, right? I go, I have a view of this property. I said, give me a week before you put it on the market. Do all the other stuff that you need to do, but before you market it, just give me a week. And on that, I worked like a crazy woman, and I got 3 investors there. And I said to her, we're going to have almost like an open day, but amongst these guys. I'm coming with my business partners. We came through, myself, the 3 investors, the real estate agent. And I asked the real estate agent, would you be comfortable, like how I do? I first walk around the property, then I walk into the property, that I'm talking to my business partners about that. You can come with, you can answer the questions that I may not know, but you also don't feel like, too many people, whatever's your thing. So I led the conversation. I walked around, I did my thing, and I said, I've got all the details the real estate agent has given me, all of these things, 1, 2, 3. Before we go onto the market with this property, I'm bringing it to you guys as my business partners, and I'd like to see how we can close this deal. 48 hours, one of the 3 said, I'm going to sign an offer to purchase. We negotiated a little bit harder. We came back, boom, things are going through. This guy was tapping into equity. So then he got the ball rolling with equity, 1, 2, 3, 1, 2, 3. Within a 2-week span, the deal was found. The numbers were run. They viewed the property. The deal was closed. It was a cash deal because he tapped into equity. I got my money. So it can happen in 2 weeks' time, Nare, or it can happen in a space of 4 months. And sometimes the deal can fall apart. There's a deal that fell apart. I cried snot and tears about it. And I was not a very happy person. I could have made a huge amount of money in that deal, but it is what it is. What I found in my process chain, I did not have enough property investors that were that liquid. The deal was good. My circle of people around me at that time just was not next level versus what I was used to. So I'm trusting that that has answered your question, Nari. There is an attorney question. What is the maximum duration of subject to clause can be effective? Perfect. I'll note that particular question. Eviction law. Why is it a distressed property? Can you buy the new development? Okay, cool. I'm with you now, Kerry. Sorry. So the attorney is eviction law. Boom. Then the next question is, why is it a distressed property? Can you not buy new development? Personally, with new development, my interaction, many people that I know as well, when it comes to distressed property, um, it's easy to negotiate it under the market value. So if a property is worth 500,000 and it's really run down, people understand that the next person needs to fix it up, and then you are able to get it under market value, right? New development I have found as follows: the the developers have already bought the land, they've made their money. Okay. The second component to a developer, they have then sold off plan property. Okay. Build your own property, sketch it out, do all of those wonderful things, but you need to pay X, Y, Z. The money that you pay into the developer for that particular open plan property still needs to be developed. They're now using your money to build up that property. The third thing, they talk about no transfer costs because it's not being transferred from one person to the other. In fact, it's a new buy. So they attract people with no transfer costs. Now, fast forward, what I have found is that the developer has already made their money, right? Now you in the space, you buy the property, you rent it out. The rental, will it really cover your bond, which is your financing costs, and will it cover your monthly operating expenses? Generally, you will have to supplement, okay, until such a time. So this is why in property investing, I have learned and I also have taught not to go for new developments. There are some people that have made money in new developments, don't get me wrong, but it's not as many people as I know that has made money in new development versus distressed properties. Ultimately, what answers your question is Wednesday's lesson, running your numbers. When you run your numbers, because we don't buy on emotion, we don't buy on feeling that, oh, this area is just going to work. It is beautiful. It is 1 to 3. I can feel the spirit of everything here and I'm buying it. We work on numbers. So that will be able to help you to make the final decision. And that's why we generally go for distressed versus new development. I trust that that has answered your question. Lesloho Nolo says, is it possible to help a sourcing agent that is on in another province in closing a deal, or he must find a local attorney? Lesloho Nolo, that question I can answer you straight away. By the theme of the questions, I know who I'm going to call. I know it's, let's pray she's available. Okay. Yes, the answer is yes. Because at the end of the day, the facilitation of that deal in terms of the offer to purchase and things like that can be done telephonically. So perfect stuff. I now have got a good sense of which lawyer I'm going to speak to first. Cindy, I'm really trying. Hlantla, can I call you Hlantla for now? Okay. Hlantla Mazibuko says, when it comes to the work involved in selling a property, what makes a sourcing agent different to a real estate agent? Beautiful question. Well done on that question. I love that question. So think about this. When a person is selling his property or her property, they're the seller. They call the real estate agent. Why? Because the real estate agent can market the property, right? That's a role and function as we understand a real estate agent. A sourcing agent, on the other hand, property wholesaler, very different. They are acting on behalf of an investor. They are saying, the investor says, I am dealing with strategy 1 in this particular area. Please, can you find me a property? So The real estate agent is going to go and find, the sourcing agent is going to go and find that property. Okay. It's going to do the due diligence that we spoke of. They're going to do the market research. And on Wednesday's lesson, they're going to do the running of the numbers. They're going to put it in a proposal and say to the real estate, to the property investor, this is how much money you can make on that deal. Now, the real estate agent is going to be selling that property on behalf of the seller to make the most money for the seller. The sourcing agent is going to be working on behalf of the property investor to see how best they can broker the deal to get to a profit that they're all happy with. So I trust that that has helped with the thin line between a real estate agent and sourcing agent. You'll also find that, a real estate agent is very much like the seller needs 500,000 and that's it. You can't go more than this. Try and negotiate whatever you can negotiate until the cows come home. No. The sourcing agent will understand that, okay, and keep on looking. They'll just keep on looking until they get to that deal that makes sense. And then they come to the investor and say, come, let's go and view that property, depending on how that sourcing agent has their processes. I'm one of those that will say, come, let's go and view the property. Even if I've taken pictures, even if I've taken a video, I want that property investor to have done their due diligence and their market research, even after I've given them all the documentation. Okay. And then the second thing is they must come with me. Let's go and view the property. Why? So that they're also making an informed decision from where they are. So I trust that that helps your question. Then Tandanani says, can a deal be finalized without using an attorney? When you say finalized, we can negotiate. We can do the offer to purchase. However, South African law says there must be a conveyancing attorney, because the attorney is going to help with the title deeds by taking the name, going to help with that particular process, because it needs to move from the name of the seller to the buyer. So all that stuff is then done in the conveyances space. So let me be more clear, because they don't actually write it. They facilitate. That's the word. A conveyancing attorney is by and large a facilitator of the deal to make sure that it's legal. I trust that that makes sense. Yolo says, what suspensive conditions can one use on an offer to purchase with the intention to source the property? That's one. What agreement can one sign with an investor to protect the IP on the deal? That's two. And how can one make a fee while staying within the EAAB regulations? You have done your homework. So firstly, every deal is different. That's the one thing you need to learn over time. The suspensive conditions is really dependent on the actual deal that you are in. Some people will say, I'm not going to buy this property until I sell that property. Okay. In investing, we don't like that one. There's another suspensive condition that you could use, and you can say, could I have 14 days due diligence to understand what this property is all about? And you can lock in the deal that way. But there's a whole lot more that goes with it as well. So there's no one size suspensive condition that will fit all, especially when it comes to sourcing. It's dependent on the actual property. All right. What agreement do you sign? The agreement that you sign with an investor is called a non-disclosure agreement. It's a 50-50 thing. So let me put it this way. The non-disclosure agreement says to the investor, I am serious about my business because this is what I do. I find properties, I run deals and things like that, right? So for me to be able to share with you the information, I will be able to let's sign this non-disclosure agreement, and then we can have free conversation between us with you not going to go and get my deal, okay? Because your non-disclosure agreement will be able to say that that particular property investor cannot go and get this particular deal of yours within X amount of time. The reality of the moment is there are property investors that are either amateur or they will swindle you out of a deal. That's the reality of life. In fact, there was once upon a time that I like to share that TJ, my husband, had signed, had a conversation with an investor. 1, 2, 3, that investor was no longer interested. Back at the ranch, the investor got the brother to buy the deal. And it just, what that investor didn't know is that we also already had units in that block. Come the AGM, the annual general meeting, TJ sitting there and he's looking at this guy thinking, this guy's got a face like so and so and so and so. So as the meeting progressed, he eventually found so and so's surname and it clicked. By the way, I know the surname. 1, 2, 3 in conversation. This person doesn't know who TJ is. TJ doesn't know who this person is, but he eventually found out this is the brother of the property investor that went quiet. We never dealt with that person again. So the reality of a non-disclosure agreement, it can't take you that far, but it can take you far enough. To go to small claims court and all of that, I've never done that. I've been swindled out of a deal as well, but that was one compared to others that I've closed. So it was something that I just made sure. When that particular investor's name came up, I'm like, I don't talk about people that I don't trust. I've got my own opinion about that person. I don't want to talk about them. So I've made it clear directly and indirectly. And the third part is, so right now, the Property Practitioners Act, in terms of the EAAB, there's a lot of things that are not finalized as yet. That's still to be finalized. Okay. So when it comes to contravening any sort of act where there's a fee involved, what I generally do is me and the investor have to have an understanding that we work as a collective. He is or she is business partners with me, and our deal is between the two of us. The second part, what I like to solidify in terms of a suspensive condition, is push to use an attorney of choice. So what I end up saying is on the suspensive conditions, I'm like, anyway, what you need to be pushing is the agenda of us using this particular attorney, because while we're using this attorney, I'm able to say to the attorney, this is the investor that bought a deal from me. Can I use you as a conduit to get my sourcing fee from them to make sure that I solidify that? Now, in property law, there is nowhere that says you cannot use your own attorney. You can push, you can negotiate to use your attorney. And at the end of the day, what goes back to is that as the one that is paying the fees, which is the property investor, they can say, I want to use my attorney of choice. And I've never seen that a seller will walk away from a deal because they're not using uh, the seller's attorney, but they're using the investor's attorney. So I trust that that mouthful has helped. We will obviously, these are very specific to property wholesaling. So for those of you that are getting started, I trust that that didn't confuse much. In the beginning, I like to keep a lot of things, like I shared with you, the next 3 days is really just to build a foundation. But certainly, I love the questions. What I'm going to do is I see another attorney question. I'm going to ask everybody right now at this point. I'm going to answer the last 2 questions from Letlogo Nolo and from Sibongile. Okay. And then what I'm wanting to do is that if there's any questions on the content that we've touched tonight, drop it in the comments so we can close off with that. And tomorrow we'll pick up on, how do I find a property investing opportunity? How do I find a deal? What does a deal sound like? What does a deal look like? And what I need to take care of in terms of a deal. Today, we covered definitions, we covered mindset, our attitudes, our belief, our courage, coming out of our comfort zone, and we covered the overall strategy of the life cycle of a deal. So Attorney, what happens when you buy a property and realize at a later stage after buying that property that there are certain things that the seller did not tell you about and you didn't see them while viewing the property? Who's responsible for fixing whatever that needs to be fixed? Is there a clause that gives the buyer some time after? So your question is loaded. That is another 15 minutes of conversation, but there is something called latent and patent defects, and the obvious thing, what is it they call it? The seller. There's a word for it. I'll try and find it, but basically says, let's put it this way: there's certain defects that the seller should have known about. So if it's when it's raining and the roof is leaking and they didn't tell you, it's an obvious defect that you can fight about. Sibungile, what I want you to do is this particular question, copy it down or write it down that you've given, right? Let the attorney go into a lot of detail about that one. That's a nice attorney question. How do you control a deal so you can use your own attorney as sourcing agent instead of the agent? You find the deal directly and you don't use a real estate agent to find the deal. That's how you can control it. So if you find the seller directly, you are able to say to the seller, I work with a couple of business people that like to buy such and such a property. So you don't have to market your property. You don't have to have a lot of people walking in and out of your property. So what I can do is, if you're comfortable, I'm going to share with you a property attorney that usually helps us in closing these particular instances like your property, and we're going to use that particular attorney. What I found in my experience, 99% of the time, sellers don't even know that they can choose their own conveyancing attorney. So to answer your question directly, you can find the deal directly without using a real estate agent. Maureen says, I find that it's difficult to negotiate the usage of own attorney. I end up negotiating with the seller's attorney for a good discount. Yes, Maureen, you are sharing the other side of the coin perfectly. There are times where I have found like this deal is so proper. I actually don't care who is the attorney. But on the other side, I want to know the property investor that I'm working with is also solid. So that actually helps me on how snotty I'm going to be in my suspensive conditions or not. But Maureen, you are perfectly, perfectly right. Guys, the one thing I want to share with you, there's, as much as there's the shiny side of things, there's the other side of things. And Maureen nailed it. When she finds it difficult to negotiate the usage of her own attorney, what does she do? She decides, hell no, I'm not going to give up here. I'm going to end up negotiating a discount on the transfer costs. You're gonna win one way or the other, right? Kerry says, what is the best book to read other than Rich Dad Poor Dad would help change your mindset? That is slightly a tricky one, but I'm going to tell you my favorite. Where is, see, I'm working in my little office space here, right? I'm going to tell you my favorite, and I'm going to tell you why it's my favorite. This box, wherever I go, if I decide to go and work outside, my box goes with me, because in my box is my favorite things. This is the first one. The Richest Man in Babylon. Okay, I'm going to tell you why. The simple fact is this: the Babylonians back in the day were the richest people, were very rich people around. That's one. Two, in one of the early chapters, one of the things I learned is that this guy was wanting to understand, how do I make more money, or how do I get rich? Because what I'm doing, I'm just surviving on, like I'm a living hand to mouth. And then he goes on to discover, hey, there's this merchant I could learn from. And what this merchant ends up telling him is like, you know what? There was a guy that wanted to get rich. But on the side, he was able to give this guy who was a brick maker money. And this brickmaker was also dabbling in jewelry. But because he was only just dabbling, this brickmaker, the guy gave this brickmaker money. The brickmaker went over the seas, as they called it, across the waters, came back and lost all that money. Why? Because he wasn't an expert in jewelry, but he wanted to use it as a side thing. And the one biggest lesson that came out of it is, don't go to a brickmaker to broker a jewelry deal. Go to the guy that deals in jewelry. And then he went on to say, okay, I want to learn from the right people. And when he started learning from the right people, he started understanding the principle that you pay yourself money. All right. So personally, what I do is, in the faith that I'm in, I tithe. So tithing, after my tithe, I give a tenth of my money to myself, and I put it in a flexi save. Okay. And then I start taking care of every day-to-day stuff, right? But what happens with this tenth that I pay myself, over a period of time, when I can see that I can invest in something small, I take that amount of money, but I go to the person that is really good at the thing I'm interested in. And that's what I learned from the richest man in Babylon. So this is my favorite mindset book. Okay. The second one is The Values Factor by John DeMartini. It's very much growing your financial freedom type of value system, where you're understanding where you are and where you're wanting to go to. Okay. That for me is my second one. And this third one, I trust already in a disclaimer, I trust that it doesn't offend anybody, but this is my belief. So I'm wanting to encourage you that if you've got faith of some sorts, make sure that your faith is also part of that. And my third one is the Bible. So wherever I go, I've got my Bible, and this also shapes my mindset. So off the cuff, my 3 long-term books is about this, and this is what feeds my mind. This one was the smallest, most dynamic mindset book ever. So Luyolo is reading the exact same book. High five, brother. And then let's see the returning question from Samuel. What happens if my private investor pulls out of a deal close to transfer of property? It all goes back to, what did he sign on the offer to purchase? Because the offer to purchase will hold him at ransom. The offer to purchase is a legally binding document. So if they pull out after signing a legally binding document, there's repercussions from the legally binding document. So again, if there's more to that question, Samuel, what I would love is that you keep that question. So what I will do is I will already get onto it first thing tomorrow morning, and have a conversation with an attorney, my attorney friend, to see that she can come through, have this conversation. And what we will do is, for everyone that is in Zoom, I'll either read out the questions, or if I need to elaborate or need you to elaborate on the question, I will ask you to unmute the question, and so that we can position it to the lawyer. So let's cross fingers that she's either available on Monday or Tuesday. Cool stuff. So I trust that I've been able to get to everybody. And I trust that the first day, the installment of the 4-day training, the first installment has been good. And as we close off this particular session, what I would love that you do, just as Carrie had asked about a mindset book, sit down. There's 2 pieces of homework I've got for you. First one, sit down and be honest with yourself where you are. Why? So that you can determine what your strategy is. That's the first and foremost. It's personal homework, this one, for today, okay? But tomorrow, when we discussion about it, Nyana, I'd like you to share your, like, what did you do to process that? So the first thing is really just be honest with yourself. Where am I? What will get me out of bed? That's your strategy, right? And then The second thing I want you to sit down and note that what is my strategy? Okay, what am I going to do to fulfill it? So that's a very personal stuff, right? And like I shared with you tonight, homework is of a personal nature, because today we started off with mindset and then what to expect in the overall strategy of property. Tomorrow we get to executing, finding deals. Okay, so you will use those methods on finding the deals. You will use those methods of what we're going to cover tomorrow on your next step into property investing. If there are no more questions, I would like to then say tonight is a wrap. I'm wanting to say thank you very much for participating, for coming to the party. Our numbers fluctuated greatly today in Zoom. That's always to be expected. I want you to understand where you are. If you take advantage of being here and taking the most where you are, you will get far. In fact, it's a pleasure, Maureen. Maureen says, thank you, Jenna. Let me use Maureen as a quick example for like 60 seconds. Maureen, and it was my birthday. I was giving away, I think I was running a competition. Like you can guys see, at least once or twice a year, I do radical things. And the end of 2019, I ran a competition. Maureen participated in that competition. She won what we're going through now, the boot camp. It was already the online recorded version. But everywhere I go, I find Maureen there. Maureen wants to learn and she wants to get ahead. That's how I see things. So if you're going to be Maureen and you're going to pitch up, and still 2 3 years later you pushing and you going through, today she's talking about she negotiates better prices, and that means that when she decided to take action way back when to where she is now, she's evolved. So high five to you, Maureen. Tandazile, it is a pleasure. Dr. Masola, it is a pleasure. Thank you so much. Looking forward to tomorrow. Luyula, I like that one. Thank you for your time, Auntie Jen. I see you. I see you. And Kerry, thank you so much. Thank you very much, Jen. This was a fantastic session, and I'm looking forward to tomorrow's session. A lot to think about tonight. Fantastic stuff. So, ladies and gents, have a good one. I look forward for the Zoom link. It's the same link for the rest of the week. For the YouTube link, just make sure that you click on the next link after using the first one that you may have used. So take good care. God bless. And I trust that, again, tomorrow is going to be an awesome one. You bring it and you do what you need to do. One more question, actually, one more request. If you are on YouTube, and even if you weren't, you could go to YouTube, go and click on the share button if you found tonight valuable. Because the more people that get to knowing things like this, the better we are in a place where we're wanting to get ahead. So I would like to challenge you on that one. Click on the share button, see who else can come through tomorrow. I'm going to leave this content up on YouTube. Who uses it, uses it. Who doesn't, well, we're all different. So take good care. God bless you and have an awesome day tomorrow.